Okay, great. So, Ruwan, if you'd like to enter the stage as well as the rest of the team, there is the button below for you to enter the stage.
Can you hear me?
Give it a few minutes. Yeah, we can hear you. All
Okay.
good. Let's just give it a few minutes, and we'll kick off very soon.
Okay, so hey everyone, glad you can all be here today for our first live AMA. So I am the community advisor for seasonal tokens, and I have with me today the lead developer and founder of the project, Ruwan, as well as the rest of the team. We have Tiers as the community manager, bringing years of experience working with DeFi and crypto projects. He is not currently here though, unfortunately. He has built a growing and active community on Discord. The marketing is coordinated by Polar, who has extensive experience with digital marketing and cryptocurrency projects. The team has expanded since the project has started to accommodate the needs of the growing project. So Logitech is the resident Discord expert and moderator. We have Trinity as our lead tech guru and investor liaison, as well as Holdemir, who leads the community on Discord, and Helping Hand, who provides assistance and also serves as a moderator. Today, also, we have a special guest who is Lee Ryder. He is an expert in crypto in general, as well as being invested in Bitcoin since 2011. He is part of Blue Edge Financial. So, Rowan, if you could please head over to the stage. Give us a second. We're solving a minor difficulty.
No, it's the move to audience button on the left. Yes.
Can you hear me now?
Okay, great. Hey, Rowan.
Hey, okay, fantastic. It's great to be here. This is my first time on one of these, so I'm just getting used to the interface.
It's okay. So, I have a few questions for you, Rowan, before we open the floor for other people to ask. So I'm going to start. So what is your background in crypto, and why did you decide to create seasonal tokens?
So I've been in crypto for a long time, I guess. So I started, when crypto meant cryptography, I was studying cryptography in 1997. I worked for a cryptography company briefly and got interested in elliptic curve cryptography, which is what modern cryptocurrencies are based on. And then in 2008, after the financial crisis, I started trying to create a digital currency because it appeared that the banks weren't wise custodians of the public's money. But unfortunately, Bitcoin beat me to it. And then I started getting interested in Bitcoin. And I also started investing in Bitcoin around 2011. And basically, that was obviously a good investment. But what I found over the years was that Bitcoin goes up in price once every 4 years after the halving takes place. And then it doesn't do so well for a couple of years after that until the next halving. Basically, the market adjusts when the supply is cut in half and the rate of production is, or the cost of production is doubled. So having watched that, I was able to see what was going to happen to my Bitcoin investment in the future. And it was going to be good, and then it was going to be bad. So what I wanted to do was to find a way to dodge the bear market of Bitcoin. So my idea, my earliest idea, was to basically make a fork of Bitcoin, like another copy of Bitcoin that was basically offset from the original Bitcoin by a year or 2 years, so that when Bitcoin starts to go down, I'd be able to switch to this new coin. But what I found, though, was that working with the Bitcoin code is very hard, and trying to build a blockchain and maintain a blockchain is very difficult. You have to write your own wallet software. You have to worry about 51% attacks. You have to write your own block explorer, and it's basically a very complex project. And doing this with in order to get something that would cover the entire 4 years, I would need essentially 4 copies of Bitcoin. So that was going to be an awful lot of work, and it was too complex. What I found was that doing it on Ethereum using smart contracts made it extremely simple. Instead of having tens of thousands of lines of code, I only had about 250 lines of code to write to make the tokens. So that's basically the motivation behind the token project.
Okay, this is very nice to hear. So the next question is going to be, so as a newcomer, a new joiner, why would they invest? In your opinion, why would they invest in the project?
So there are a couple of reasons. So basically, the main reason would be to take advantage of these successive halvings, so that you can always hold a token that's reasonably halved, and where you can expect the market to be adjusting to the new cost of production and the lower supply. So you can kind of expect there to be a bull market for each token one after another, and you can switch from token to token in order to keep an investment that's basically always getting the benefits of the halving. But there are other reasons as well. So because the tokens are almost identical apart from their rates of production and the cost of production, you can you can use this simple trading algorithm of always trading tokens for more tokens. And when you do that, then there's a number, which is the total number of tokens in your investment, and that will always go up and never go down. And that basically makes it an investment rather than a speculation, because when investment involves a guarantee of safety, and if you do this, then you have a measure of the value of your investment that always goes up. So you don't risk a loss measured in tokens.
This is very interesting to hear, and an insightful way of thinking about the project and why people should invest. So to continue with this, are you depending on their market prices rising because of their rarity, since you've mentioned halving?
So it's not actually the rarity. So there are collectibles that basically they have a high price because they're very rare and because there's public interest in them. But it's not the rarity of the tokens themselves that is expected to make their price rise over time in the future. It's the increasing cost of production. And what happens is that when the cost of production doubles, then the market has to adjust to that. And it's not that the tokens are getting rarer and rarer. They're actually more and more tokens produced over time. So they're becoming less rare, but they're becoming harder to produce and harder to obtain.
Okay, this clears up the air. So what differentiates this investment project? So what differentiates seasonal tokens from any of the other projects out there? Of course, this is other than the fact of it being 4 tokens cutting Bitcoin seasonality.
Absolutely, yeah. So I think what kind of differentiates it is that as far as I know, well, of course, most of the cryptocurrency projects out there are intended to be investments, but they weren't designed primarily. So Bitcoin, for example, was designed to be money. Ethereum was designed to be a public computer. Lots of the tokens out there are used in games. They have their utility tokens. They're tokens that are intended to be used for payments in specific industries. But with the tokens, they're not actually designed to have any purpose other than investment. The interests of investors have been put kind of as the highest priority. And there's no, you can use them for payments. They are cryptocurrencies, and you can basically do with the tokens what you can do with any other cryptocurrency. So, but payments are not actually the intended purpose. It's intended purely for investment.
Okay, so on to the next question, which is, where does the demand come from? So where does the demand for each token come from?
Yeah, so there's so farming creates a demand for the tokens. So it creates a relative demand. What happens with farming is that if you farm with winter tokens, you get paid 60% more than you will if you farm with spring tokens. So that means that there's a comparative value of the tokens for farming. Winter tokens are 60% more valuable for farming, and they're also 60% more expensive to produce. So there's basically an alignment between the cost of producing the tokens and their relative value for farming. So the supply and demand are kind of matched exactly against one another. And this means that we can expect the prices of the tokens to have a ratio of 5, 6, 7, 8 for spring, summer, autumn, and winter, if that makes sense. So earlier this year, I was buying tokens at a price of 5, 6, 7, and 8 cents for spring, summer, and autumn, winter. And that matches the ratio of the cost of production and the demand from farming.
Okay, so it's nice to hear that you are invested in this project as much as the team is. So why do halvings occur every 9 months?
Yeah, so that was a result of I studied the charts of Bitcoin and other cryptocurrencies to see how they reacted after a halving, and what seems to happen is there's about 4 or 5 months where nothing really happens, and then the market starts to adjust to the scarcity. So what happens is that after a halving takes place, nothing immediately dramatic happens on the market. The cost of production is increased, but there are a whole lot of tokens that are already on the market, and there's a stockpile of tokens, and that stockpile starts to dwindle over time as the outflows stay the same, but the inflow is halved. And when that stockpile eventually reaches some critical level, then the market has to adjust. And after that happens, the price starts to rise. And having looked at the responses to prices of other tokens or other coins and Bitcoin, it seems to take about a year for the entire bull market to play itself out. So by having the tokens happen every 9 months, it's possible to have one bull market start just before the other bull market ends. So they're kind of overlapping bull markets, and there's no period then. Hopefully, there won't be a period when all the tokens are in a bear market at the same time.
That is an amazing view of this. So what I understood here is just to clear it up. So when the halving occurs, it doesn't only affect the supply of the token, which then causes it to increase. It also affects the overall project in general. So when Spring gets halved, the other tokens are also affected.
The other tokens, well, we could expect the other tokens to be affected because miners will be produced. Miners have a certain cost of production, and when it costs them more to produce Spring tokens in comparison to the other tokens, then essentially you'll have fewer Spring tokens and more of the other tokens. And when the Spring token price rises, you can expect the other token prices to fall in comparison to it. So that's basically what's happening.
Okay, great. But what happens if nobody buys them?
So, well, I'm going to be buying them. The reason I created this was not so that I could sell the tokens, and I didn't create tokens and then intend to start selling them to other people. I created them because I wanted an investment for myself. So I'm going to be buying them, and other people are buying them. But if so we can ask what would happen if there was a severe lack of public interest in the tokens. How low could the price of the tokens go? And if, say, for example, we can put an approximate floor on the price of the tokens. For example, if the price of the tokens was 1/10 of a cent each, then that means that it would cost only $33,000 to buy all of the tokens that will ever exist of a particular type. And I've already spent more than that on the tokens, and I'm planning to spend a lot more than that in the future. So that means that we can basically be sure that the price of the tokens will never get that low, and it's going to be there's going to be a floor basically on the price of the tokens. But even if people don't buy the tokens, they will still have they'll still have a price, and the prices will still be affected by the supply and demand. So the farming will produce the demand that doesn't require people to buy them, and people don't need to buy the tokens in order to trade them for one another. So even if there are no new dollars or more Ethereum being spent on the tokens will still be cyclically traded, and this will create a demand that will support their prices.
Okay, it's good to know that there's this safety net made by you. So, what would happen if, when people go and buy the Spring token just before the halving, and then sell them afterwards, causing a big price spike and a subsequent crash? What do you have on this? To comment on this?
Yeah, so well, I hope that doesn't happen, because what would happen is that if the price spikes and then crashes, then the people who are buying at the top will lose money. That would be an effect of speculation, and that would be essentially people misunderstanding the economics of the project. What's going to happen based on the supply and demand are very slow changes that take place over the course of months. So as we were saying earlier, it's about 9 months, or well, it's about a year that it takes for other tokens to react to the halving. And so this is a very slow process. If people all buy Spring tokens immediately before the halving, then it's because they're expecting the halving to have an immediate effect. But it's not an immediate effect. It's a slow effect. It actually starts months after the halving takes place, and it takes a year to play out. So hopefully people, when they study the project, will understand that and won't rush in just before a halving thinking that it's something dramatic is going to happen on the day of the halving, because it won't.
Okay, so if people come in at the time of the halving and they start buying the tokens, that's going to obviously cause a pump. So what happens after the dump? Because some people might also be selling and waiting for this pump. Although you did mention that the halving won't take effect directly.
Yeah. So it's certainly possible that people will do that, and people will. That's basically trading based on the effect of speculation on the market. So if you think that there's going to be a lot of people who don't understand the economics of the tokens and who are going to buy Spring tokens, for example, in massive quantities just before the halving, then you could buy slightly before that and then sell. Basically, when this pump happens, and you could make a profit from that, and that's basically profiting from the misunderstandings of other people. Does that make sense?
Yeah, this makes perfect sense. Thank you for clearing that up. Okay, so I'm done with my questions, and I'm going to open the floor for questions. In the meantime, for those of you who wish to have any questions and ask for one, please request to be a speaker. There's a question here by Airdrop Land 98 that says approximately what percentage of staking cuts are in this project?
Right. So the staking in the project is basically in the form of farming. People will they get some Ethereum and some one of the tokens, and then they put this into Uniswap, and Uniswap gives them a liquidity token, which is a non-fungible token that they can then deposit into the farm. And 9% of all the tokens that are mined mined by the mining pool are distributed to farmers. So that produces essentially a staking reward or a staking cut, and it's 9%.
Okay, so if anybody has any questions from the audience, please feel free to raise your hand and we'll bring you up to the stage.
Crypto addict, crypto dialect, amazing.
Hello. Hello there, Lee. How are you doing?
I'm doing well. Thank you for having me on, and congratulations on y'all's first AMA, which sounds like an interesting project. I just really trying to want to understand more like the value proposition of the token, and I understand like the halving events occur, and that's usually due to some form of Metcalfe's law and like user adoption. So if there's no underlying value, is really the value proposition just like the Greater's Fool theory? Because for that halving cycle to occur, you need the user adoption to also occur, right? So what is happening to drive that user adoption?
So actually, it doesn't require user adoption. It doesn't require popularity. There's an alignment between the cost of production of the tokens and the value of the tokens for farming. So, for example, winter tokens are 60% more expensive to produce, and they're 60% more valuable for farming. So that means that the price of the price of winter relative to spring is going to be 1.6, or well, market forces will tend to keep it around 1.6, regardless of how popular the project is and how useful it is. So it's not the value. It's what happens with other cryptocurrencies like Bitcoin is that there is user adoption, and that is what's driving the price of the token relative to US dollars. In this case, it's the prices of the tokens relative to each other that's controlled. We're not attempting to control the price of the tokens in US dollars in the short term. But in the very long term, what's happening is that the rate of production of the tokens is getting lower and lower. The cost of production is doubling for one token that has a cost of production doubling every 9 months, and that means that in the very long term, the tokens are going to be hard to acquire. So in 20 years, they'll be produced at less than 1% of today's rate, and the cost of production will be 100 times higher than it is today. So, but we're not in the short term. We're not attempting at all to control the price of the tokens relative to US dollars or any external currencies, because we don't have control of the demand of the tokens, and we're not attempting to do do that. But the relative supply and the relative demand for the tokens is completely under the control of the farming and mining. So, and they're completely aligned with each other. So we know that what's happening today is that winter is the most expensive token and spring is the cheapest token, basically for exactly those reasons, because winter is more expensive to produce and more valuable for farming. So when that changes, when spring becomes the one that's most expensive to produce and most valuable for farming, that will be the token whose price will rise relative to the other tokens. Whether the price rises in US dollars or not is not known. It's possible that the project will be losing popularity over that period and that the price of the tokens in US dollars will decrease. But the price of the tokens relative to each other is more tightly controlled.
Okay, that makes more sense. So it's more about the game theory of the miners' production and the liquidity pool providers. That would drive the price action movement. And then you're not talking in absolute terms against dollars, only in relative terms against each other.
Absolutely, yes. And what you can do is take tokens for more tokens, and then the number of tokens you have will always go up and never go down.
That's pretty interesting. An interesting take on game theory as well. So, okay, very cool. I appreciate the answer.
Absolutely, that's great. And it was a great question.
Okay, so thank you, Lee, for your great question and for coming up to the stage. So if anybody else has any questions, please feel free to raise your hand to join the stage.
I think Sandeep had his arm raised.
Sandeep, if you're there, we'd gladly put you on the stage.
In the meantime, I can drop. I think I can drop one for Ruwan. Ruwan,
Yeah, sure thing.
I know that you've been in the project maybe live around 6 months or more, and preparing for it even a bit more than that. So throughout this whole period of time, what was the most special moment for you throughout this whole project? A moment that was really affected you and made you feel good about everything that's happening here?
Well, that's an interesting question, because what really comes to mind is when we got the team expanded and when a whole lot of people started turning up on Discord. News about the project basically spread through word of mouth, and before we even started advertising. So having that happen and having a whole lot of people turn up and join in and become enthusiastic about the project and join the team, that was the time I think that I really felt very good about the project. I thought it's really taking off and it's going very well, and it's gone very well since then, thanks to the team. Everybody who's joined has been excellent.
Amazing. And it's glad to know that this is your answer, because somehow I'm related to this answer as well. So very glad to be part of the team, Ruwan.
Absolutely, you are. Everybody else is as well.
This is also, I also agree with what Holdemir said. This is a great answer and perspective about what you think about the project. So if there's anybody else that wishes to have any questions, in the meantime, if you want, Ruwan, you can explain a little bit about farming, because some people here are new to this, and this is a question that I've seen a lot in the general chat.
Okay, yeah. So what happens is that in order to be able to trade the tokens, there needs to be enough liquidity on the market. And what that means is there needs to be a whole lot of tokens and a whole lot of Ethereum, so that somebody who wants to buy the tokens can add some Ethereum and take some tokens, and somebody who wants to sell the tokens can add tokens and take Ethereum. So what a farmer is, or what liquidity providing is on Uniswap, is you basically deposit a lot of your own tokens and a lot of your own Ethereum there, and then you allow traders to take from one pile and add to the other pile. And that allows the trading to take place, and liquidity providers collect a fee of 1% whenever one of these trades happens. But that is not a sufficient incentive, because what can happen is that if the price of the tokens rises a lot, then that means that people are buying them, but they're buying them from you, and that means that you end up with less tokens. And if people sell a lot, then they're selling them to you, and that means that you end up with a lot of tokens, which are then cheaper. So there's a risk of making a loss if you're a liquidity provider. So in order to offset that loss, there has to be an extra motivation to get people to provide this liquidity so that the tokens can be easily traded. So what the farm does is it basically just pays tokens to these liquidity providers, and then they may make a loss from effectively selling and buying the tokens, but what should happen, hopefully, is that loss should be overcome by the farming income that they get from the 9% of tokens that are distributed to farmers.
Okay, this is a great explanation about farming. Another thing that I wanted to see if you could tackle is the impermanent loss when it comes to staking and farming. So what are your thoughts about that? What are you doing for that?
Yeah, so that is the loss. So impermanent loss, it refers to this fact that if you're providing liquidity, you're effectively trading. You're being paid to put tokens on the market and to always basically buy tokens at the current price and sell tokens at the current price when a trader comes along and wants to make that trade. So the impermanent loss is basically the effective loss that you make because if the price of the tokens changes a lot, for example, it goes up, then that means people are buying the tokens and they're buying them from you, and that means that you're losing you're gaining Ethereum, but you're losing tokens because you're basically selling the tokens. And if a lot of people are selling the tokens, the price goes down and they're selling them to you, and then the tokens are getting cheaper, you're getting more of them, and your Ethereum is being taken away by these people who are selling the tokens to you. So if the price moves either up or down, then that means that you're making a trading loss effectively, because you're basically acting as a trader there, as a counterparty to other traders. So that's called impermanent loss. And it's called that because the expectation is that the fees that you'll get from providing liquidity will eventually overcome this, and you'll make a profit in the long term, even though you make a short-term loss because of the buying and selling. But yes, what farming is essentially designed to overcome this impermanent loss, basically by paying people to do this. Does that make sense?
Yeah, it does make sense. Thank you for your answer. Does anybody have any questions now that they'd like to chime in? You can post your questions in #questions if you can't speak, or you can raise your hand and request to speak to be moved on stage.
I think I have one of the main questions from the general chat. It's obviously regarding exchanges. Everyone wants to know, when are we adding ourselves onto different exchanges? We just got onto Coinbit, but let's see what Redon has as an answer to that.
So we definitely do have plans to list on other exchanges. We're not in contact with any other exchanges right now. And Polar is the marketing director, and he's the one who's going to be overseeing the plan to which exchanges we're going to be trying to get listed on and in which order. Coinbit was a great first choice. We were able to do that pretty quickly and pretty cheaply. And basically, as time goes on, we'll be applying to more and more exchanges. But I'm not the one who's going to be strategizing about that. That's Polar. I don't know if he's here today.
No, Polar isn't here today. He had something come up, and he was excused.
Okay. Basically, he's the one who's drawing up those plans, and he'll be presenting them to me once he has a clear idea about what's the best strategy. But I'm just a developer, and I'm not basically taking the lead in all aspects of the project. But we definitely do plan to list on exchanges in the future, and we'll get to bigger and bigger exchanges as the project grows.
That sounds great. Yeah. We'll definitely have answers by the next AMA, and Polar most likely would be at the next one anyways. So.
Okay, so we have a question from Nanijia Kashi that says, can you only farm one token at a time?
So that's a great question. What happens is that when you're providing liquidity, you do provide liquidity for a specific token at a time. Like you can take a lot of Spring tokens and a lot of Ethereum, and you can provide liquidity using that, and then put that into the firm. But when you're doing that, you receive all 4 tokens. You'll get Spring, Summer, Autumn, and Winter tokens from the firm. So everything that's mined, 9% of all the tokens that are mined of all 4 types are distributed to all four types of farmers. So regardless of which individual token you've deposited, you'll be able to harvest all 4 types of tokens.
Okay, thank you for the great answer.
Okay, I think we have Crypto Didact who had another question, and actually I want to take the chance to, since we know that he's an expert in the space. Also, I would like to ask you a question, Crypto Didact, which is, in your opinion, what and this can kick off the conversation, and we can expand through it. Which is, after you ask your question, in your opinion, what do you think would allow a project to succeed in this space from your experience so far? And from what you've heard so far in this project, what is the main thing that you would like to maybe advise, comment on, or share with us, with all the community?
Yeah, definitely. Feedback is always appreciated.
I appreciate it, and most of my expertise is mainly designed for on the trading side. So I produce trading algorithms and stuff like that. That's really what I do for a living. And then building communities right now, specifically in the community space or in the crypto space. But really, what I've seen work is the user experience needs to be really clean, and it needs to be really well understood about how to go from point A to point B through the project. And then I think understanding the mechanics of the project are quite important. And then ultimately some sort of utility, which is why I keep asking back to that utility question, because especially now, when we went through 2017, that 2018 market, y'all saw the ICOs, there was just stuff coming out with no utility. And, we saw what came out of that was basically most of that stuff all went to the toilet, and the stuff that came out of it was these I think more powerful ideas that were then built into these valuable projects that actually did deliver some sort of value. So that's really where my focus is now, especially as I think crypto space in general is at a point where we've built out basically the crypto space in a vacuum, and we're connecting it to the real world now. And so now people are actually starting to see the value proposition. But if there's no value proposition, I think it's difficult to survive going forward, and that's just what I've seen. So that's just really what I'm trying to understand here. And it sounds like the value proposition is a protection mechanism of some kind.
Absolutely, yeah. So yeah, it's basically that it's you have a number that's always going to go up and never go down if you always trade tokens for more tokens. But there's another aspect to it as well, which is another use for the tokens, as it were, which is you can use them as a hedge against the seasonality of other investments. So if you buy Spring tokens, approximately when they're going to be going up in price. There's a duration of 9 months or so when they're going to be going up in price relative to the other tokens, and so. We don't know what's going to be happening with the dollar price exactly, but if the dollar price of all the tokens, if the average dollar price of all the tokens was to stay constant over that period, then that means that the dollar price of Spring would be rising over that period. So there's a seasonality that's each token has a specific season when it's expected to rise. And if you have an investment that's expected to fall over a specific period of time, you can add the token that you expect to rise in price relative to the other tokens into your portfolio during that period, and that should help to smooth out the value of your investment by providing something that's going up at the same time as the other investments are going down.
Yeah, I love that. And I think this is such a cool idea, and I'm already jumping to okay, how do we automate this for users? Because if we want users to onboard into this platform, it needs to be really easy to understand when am I in spring, when am I moving to summer, when am I moving to autumn, when am I moving to winter? So yeah, I think that's quite cool. And I actually had a question. So I guess all 4 tokens are they always in existence, and then they're all halving every 9 months. Is that correct?
Yeah, so well, each token halves every 3 years, but there's a 9 months interval between the halving of one token and the next one. So in June of this year, then there'll be the halving, and then in March next year there'll be the summer halving, and then 9 months after that there'll be the autumn, and then 9 months after that there'll be winter. So the effects of the halving should be staggered on the effects of the different tokens. If that makes sense.
Yeah, that makes total sense. So like right now I want to produce winter. I could mine winter, but it's going to cost me more money than if I'm mining spring right now. And that's due to the relationship of the halving between spring and winter.
Absolutely, yeah, that's
Okay. Cool. Yeah, no, I mean, I think it's really great. I don't know if I answered the questions you asked well, but I think I think this is a really interesting project and something very unique. I think like novelty right now is still a thing in crypto, and so I think if there's novelty and there's enough, like it could be fuzzy, but I think if there's enough link to some sort of value, I think the project can be quite successful. So it's definitely better than NFTs, I think. So yeah, I like it a lot, and congratulations on the good work and the good concept. It's quite a neat idea.
Thank you very much. That's really great to hear. It's great to get that feedback.
And Crypto Addict, by the way, just like you said about NFTs, Rowan is not into NFTs and he tries to avoid it in any way. We had many questions about why don't you create an NFT and link it to the project, and Rowan was like, "No, get me away from this."
Yeah, garbage.
Yeah,
And I
guess
think
so.
I think NFTs are great, right? But everything in the future will be an NFT. So like the idea that an NFT is valuable just because it's limited is kind of like bullshit. Because really, everything will be an NFT. The value of an NFT is interoperability and the ability to move around and prove ownership. It's not about the JPEG right now. I think it's just a pure flex.
Exactly.
Okay, well, thank you. I'll step off stage now. Appreciate the time and y'all's answers.
Thank you so much, Cryptodidact. Thank you, Lee, for joining in and asking and lighting up this mood, lighting up the stage. We have a question here from
I do want to add one
Clutch.
small thing before you
Yeah.
continue to the next question.
Sure
is that
thing.
you mentioned something about added utility and automation, and I can't announce things right now, but let's just say we're working on something like this, and it will be announced maybe next month. That's all I can say.
Yes, okay, I know what you're talking about. Yeah, in due time, obviously, everything's going to be
Mhm.
announced. So on to the next question. Okay, the next question is if you're planning to add other staking pools. This is by Clutch.
Okay, so it's possible, yeah. So at the moment we have just a farm on the Ethereum network, and what we can do is we can have farming on other networks. If that was the question, or was it about the blockchain that staking is going to be on?
Well, Clutch, if you can explain yourself in the chat, or if you'd like to come up to the stage, feel free to do so.
So, well, maybe I can just explain a little bit of what the situation is. So, the ratios of the payouts have to be. Oh, sorry, if Clutch is here, then yeah, please go ahead.
Yeah, I sent him an invite to join as speaker. I'm
Okay,
not
so
sure
I
if
think-
he wishes to.
Hello, good morning.
Hello.
Hello, welcome to the stage.
Thank you for accepting my invitation. So, are you having a plan of adding staking pools in your protocol?
So we may have other farms on other blockchains, but what we can't do is to change the parameters of the farm in any way because they're kind of fixed. It has to be the case that the payouts from the farm are aligned exactly with the cost of production in order to ensure that, for example, winter is 60% more expensive than spring today. So whenever we're going to have any staking system, it has to be firmly stuck within this system of ratios. So we can't really do anything different in terms of farming. The only thing that we can really do is to just have other farms that are pretty much identical to the one that we've got now, but on other blockchains. So we could have one on Polygon or on Solana or some other blockchain, but we can't really change any details about the farm because it's rigidly fixed by the mathematics of the tokens. I hope that answers the question.
Oh, that was amazing.
Okay, so Clutch, you had another question, which is how are bond sales organized, and what marketing efforts will be taken to bring in investments, as well as will there be any additional benefits of investors? So we can start with the first one. So how are bond sales organized?
Bond sales? So am I hearing that right?
Yeah, you heard that right, although I don't know how it relates. Clutch could explain himself better.
So I think I may understand. So what's happening is that this project, the token, there was no pre-sale, and we don't need investors in order to get the project off the ground because it's already running. So we don't have as it were a company that people invest in and that we then use the investment in order to keep the operations running. But the tokens are mined using proof of work. So we're not a company that sells these tokens to other people and creates them ourselves and sells them to other people. But we're a community of people who are trying to get the tokens ourselves. We're mining them and buying them, and that's how the economics works. It doesn't require investors in the sense of somebody who gives us money so that we can perform our operations. Instead, what happens is that the tokens have a market price, and the price of the market price of the tokens isn't supported by the activities of a company. It's cut from the economics. It's from the cost of production and from the relative value for farming. So we're not relying on investors in that sense. If somebody wants to invest, what they do is they would buy the tokens, but they're not investing in us. They're not giving money to us. They're buying the tokens, and they can hold those tokens and expect them to rise in price over time. I hope that answers the question.
Clutch, if you're still there, you can continue your questions or comment if that answers your question. We can move on to his next question, which is what are the marketing efforts that will be taken? Okay, so you kind of answered that. And will there be any additional benefits for investors?
Additional benefits? So we can't do anything. Well, what we can do is we can have community initiatives, and we can try to bring attention to the project. We're creating videos and articles and press releases and so on. And we're going to be increasing in visibility. We'll be getting the tokens listed on new exchanges and so on. So the benefit for people who've invested in the tokens from these activities will be that we can expect the tokens to basically become more popular as people find out about them, and we can expect their price to rise over time. So that's the benefit that we can bring to investors. But we can't really do anything different in terms of, we couldn't, for example, create a whole lot of tokens and distribute them to investors as rewards for them doing something or for early participation, because we don't actually have the tokens. We need to mine and buy them in order to acquire them.
Okay, we have Mr. Keshav. If you'd like to join in on the stage, an invite was sent to you.
I think Mr. Keshav is not totally responsive.
Okay, I think he changed his mind, or maybe Ron already answered this question. If there aren't, okay, there he is. He's requesting. Wait. Okay, so if there's no questions right now, currently, I can end with, or at least attempt to end with this question, which is, what are the future prospects for seasonal tokens going on from now, other than the halving coming up for spring?
Okay, yeah. So the long-term prospects, the vision in the very long term is that I hope that we can create ETFs. So these are exchange traded funds. So Bitcoin, for example, isn't allowed to be held directly by institutional investors at banks and asset managers and portfolio managers because it's not a traditional investment product. So in order to be able to invest in Bitcoin, a large company would need to buy these exchange traded funds. So you need to, in order to allow the companies to do this, you need to create one of these funds and then have it traded on one of these exchanges like the New York Stock Exchange and so on. So in the long term, what we hope to do is to create these exchange traded funds for the tokens, and that will allow institutional investors and asset managers and portfolio managers to add the tokens into their portfolios. And that means that if they have an investment that's already got some seasonality, for example, if it's an airline stock and it does well in the summer but doesn't do well in the winter, or if it's an agricultural stock and it does well during harvest times but not at other times, then that means that that investment has a period when it's predictably going to be doing well and another period when it's predictably not going to be doing well. So mixing the tokens in with that investment allows them to add something with a seasonality that's opposite to the seasonality of their current investment. So when their investment is expected to be going down in value, if they add the tokens in, the token that's going to be rising in price over that period, they can smooth out the growth of the investment. And this makes the investment basically smoother and better. And this is something that's desired by a lot of portfolio managers and asset managers. And if we can do this, then that would mean that it will be basically a market of trillions of dollars, because the market for investments is the largest market in the world.
This is a very exciting answer towards the future. I'm very excited to see how this all gonna lead to. So, if nobody else has any questions, we can wrap this up. Okay, so we have Crypto Dyna come on stage.
Sorry, one last question. So now I'm really interested and I want to start mining and throw some resources at that. What's the best way for me to get started?
Okay, that's a great question. Unfortunately, it is possible to mine using GPUs. If you have a graphics card, an NVIDIA graphics card, then you can download software. It's on. If you go to the mining page on our website, then there's some instructions about how to mine. There's some links to the software. You basically need a good graphics card in order to be able to mine on a computer. But what's happened is that now there are FPGAs. These are basically specialized mining hardware devices, and they're not that expensive. You can get one for about $1,500, and it's about as good as 35 graphics cards. But because they're cheap and because they're so much more powerful, it's hard for people with GPUs to get a significant fraction of tokens from mining now. But what you can do is you can buy one of these miners. There's a website called hashaltcoin.com, and they sell a miner called a block miner, and that can be used to mine the tokens. But the problem with them is that they're very, very loud. It sounds like a jet engine taking off. And it's necessary to be able to put it somewhere where it's not going to be keeping the neighbors up at night.
Okay, I gotcha. And you said all that information's on your website?
Yeah, if you go to the mining page, there's a frequently asked questions section at the bottom, and it will have information about how to mine and where you can get the software.
If you need help, Lee, with anything, you can DM me or even open a ticket to have one-on-one assistance with the rest of the team with anything that you might have. And this offer is also for everybody here in the community. There's a ticket in the support ticket room that you can open, and you can express all your concerns in there.
Love it. Thank you so much. Appreciate the answer.
Anytime. Thank you so much for being here. So, does anybody else have any questions? Anyone would like to come onto the stage?